Let's talk about Jamie Dimon, the CEO of JP Morgan Chase, one of the most influential figures in the world of finance. Dimon is known for his sharp insights and no-nonsense approach to economic issues, and when he speaks, the financial world listens closely. As the head of the largest bank in the United States, Dimon is a major player in global banking, shaping decisions that ripple across economies worldwide. Recently, Dimon raised serious concerns about the direction of the economy, zeroing in on the auto industry as a potential warning sign for bigger problems ahead. He pointed out that the auto sector often reflects the health of the broader economy, making its struggles especially significant. He suggested that banks have been too lenient with loans, likening it to a parent noticing their teenager's reckless driving. At first it might seem harmless, but it can quickly spiral out of control if not addressed. Dimon warned that the era of easy credit might be coming to an end. If banks tighten lending, it could mean more people struggling to get loans, higher rates of declined credit, and families facing tough financial choices. The auto industry, often seen as a key economic indicator, could be the first to show signs of trouble. Slowing car sales and unsold inventory might point to deeper issues lurking beneath the surface. Dimon, a seasoned financial leader with decades of experience, suggests we should all prepare for potential economic turbulence. His perspective is shaped by years of navigating financial crises and market shifts. When someone of his stature issues a warning, it's wise to pay attention and consider what changes might be coming for the economy and our own financial lives. What triggered Dimon's alarm? It wasn't just a single event, but a series of troubling signals that began to emerge across the financial landscape. The warning signs were subtle at first, but soon became impossible to ignore. The collapse of two companies, First Brands and Tricolor Holdings, sent shockwaves through the industry, raising urgent questions about the health of the broader economy. First Brands, a major auto parts firm, is a vital link in the automotive supply chain. Its sudden downfall left manufacturers scrambling for alternatives, threatening production schedules and jobs. Meanwhile, Tricolor Holdings, a subprime auto lender, went bankrupt, highlighting the growing financial strain on everyday consumers who rely on credit to buy cars. These failures point to deepening weaknesses in the auto market, affecting both the supply side, factories and parts, and the demand side, where families struggle to afford vehicles. First Brands' collapse disrupts car production nationwide, while Tricolor's failure is a stark indicator of mounting consumer debt and financial distress in households. These are not isolated incidents, but symptoms of a fragile system built on years of easy credit and risky lending practices that now threaten to unravel. Dimon and other financial experts see these events as early warning signs of a potential economic downturn, urging caution and closer scrutiny of lending standards. The failures suggest a systemic issue, not just isolated problems, one that could trigger a domino effect across industries and communities. It's a wake-up call for the financial world to reassess lending practices, risk management, and the true resilience of the system. The message is clear. The stability of the financial system is at risk, and urgent action is needed to prevent a wider crisis from unfolding. Jamie Dimon, the influential CEO of JP Morgan Chase, used a vivid and unsettling analogy to describe his growing concerns about the financial system, what he called the cockroach theory. He compared the recent bankruptcy of Tricolor, a well-known auto lender, to spotting a cockroach in your kitchen. In Dimon's view, when you see one cockroach, it's rarely alone. There are usually many more hiding out of sight. This metaphor is a stark warning, highlighting the potential for widespread and interconnected financial issues lurking beneath the surface, waiting to be discovered. Tricolor's collapse is just the visible cockroach, but Dimon suggests that many other companies may be similarly over-leveraged and vulnerable, hidden in the shadows of the economy. Across a range of industries, these companies have relied heavily on cheap loans and easy credit, building up risky debt that could become a problem if economic conditions worsen. Dimon's warning is clear. The financial system must now search for more cockroaches, hidden risks that could threaten stability if left unchecked. The failure of Tricolor has prompted banks and financial institutions to take a much closer look at their loan portfolios, scrutinizing them for signs of trouble. It's a powerful reminder that one visible problem can often indicate a much larger, hidden issue beneath the surface, just like the tip of an iceberg. The financial world must remain vigilant, constantly identifying and addressing these risks before they can spread and cause greater harm. Dimon's message is a clear call to action for banks, investors, and regulators alike. Don't ignore the warning signs and don't wait for more cockroaches to appear. The time to act is now, before more hidden problems emerge and threaten the stability of the entire financial system. Why does a bank like JP Morgan care about a failed car lender? Because they lent it money. JP Morgan had to write off $170 million due to Tricolor's collapse. This loss is a stark reminder of the risks of lending. Other banks, like Fifth Third, also faced significant losses. These losses highlight the interconnectedness of financial institutions. One company's failure can trigger a chain reaction of financial pain. Dimon's cockroach theory suggests more such failures could occur. The fear is that many small losses could add up to a major financial crisis. The financial system must brace for potential widespread impacts. Why should you care about bankers losing money? Because it affects you. If banks tighten lending standards, loans become harder to get. This impacts your ability to buy a house, start a business, or get a car loan. The era of easy money could end, leading to financial austerity. This affects economic growth and your financial opportunities. Dimon's warning is a reminder to manage your debt wisely. The financial system's decisions impact your wallet directly. Be aware of potential changes in lending practices. Listen to Dimon's warning and prepare for possible economic shifts.